You know, whenever a new tax bill drops, there's always this collective feeling of anxiety, right? What's changing? What does this mean for my clients? And maybe most importantly, how much do I have to relearn? Well, today, we're going to dive into the 2025 blueprint and really decode what's actually happening under the hood.
So yeah, this is the question on everyone's mind. Is this some kind of fundamental rewrite of everything we know, or is it something else entirely? We're going to break down the key shifts to give you that clear picture you really need to advise your clients with confidence. So what's the big idea behind the 2025 bill? Well, it's not a radical overhaul of the system. A much better way to think of it is as a massive, systematic reshuffle. The main goal here, plain and simple, is simplification. Just imagine the architects of this bill taking the entire 1961 Act, dumping it all out on a giant table, and then just reorganizing it into a more logical, streamlined system. It's basically a massive decluttering of our tax code.
And this right here, this shows you the sheer scale of that reorganization. I mean, just look at the section numbers. Across every single income head, salary, house property, capital gains, you name it, the numbers have completely changed. This is that big reshuffle in action. The bottom line, your muscle memory for section numbers is about to get a serious workout. But it's not all just renumbering. No, there are a couple of really significant changes hidden inside this reorg. So let's start with the first big one, salary income. Okay, so for the most part, you'll see things like same concept or language simplified. Makes sense. The standard deduction, that stays the same. But notice that one little note next to perquisites? It says limit modified. That's the thing we really need to zoom in on. So here's the change. Under the old Act, perquisites were only taxable if your salary was over 50,000 rupees. Simple enough. But the 2025 bill gets rid of that specific number. It replaces it with this phrase, amount as may be prescribed. Now, this gives the government a lot more flexibility to set and change this limit in the future without having to amend the Act itself. For you and your clients, this means that threshold could change with just a simple notification. It's definitely a key variable to watch during every budget season from now on. All right, so the second major area where we see some real substantive changes is capital gains. And again, the theme here isn't a total rewrite. It's more about providing some much-needed clarity, especially when it comes to exemptions. Yeah, we see a huge renumbering again here. What used to be sections 45 through 55A are now 67 through 91. But the key is to look at the exemptions. For example, the new Section 85, which replaces 54EC, clarifies that the exemption applies to long-term capital gains only, and Section 86 has a modified deposit condition. Now, these aren't just minor tweaks, they're actually designed to plug gaps and reduce ambiguity. And this note from the source material really drives the point home. The new language in the bill is so much more precise. It specifies long-term capital gain from transfer of residential house property to remove any confusion that existed in the older sections. This is a direct attempt to cut down on litigation and just make the law clearer for everybody.
Okay, so now that we've covered the two biggest exceptions, let's do a little quick-fire round through the other income heads just to really hammer home that main theme of simplification and reorganization.
First up, house property. The section numbers have shifted from the 22-27 block down to 2025. But the core concepts, charging section, annual value interest deduction, all of it remains exactly the same. So, no surprises here.
Now for business and profession, it's a pretty similar story, just with a bit more restructuring. Key concepts like depreciation carry over, but the provisions for expenses and disallowances have been consolidated. For instance, the old sections 30 to 37 are now grouped into a much tighter 28 to 34 block. The whole goal is just a cleaner, more logical structure.
And finally, income from other sources. Does this look familiar? It should. It's the same concept, same provisions, same rules, just new section numbers. This really confirms the trend across the board. This is fundamentally a recataloging exercise.
So what's the bottom line here? After looking at all of this, what are the key takeaways for you as a professional?
Okay, here are the 4 crucial points. First, get ready to relearn your section numbers. There's just no way around it. Second, pay very close attention to that new, more flexible rule for salary perquisites. Third, appreciate the new clarity around long-term capital gains exemptions. This could actually be a really positive change. And finally, and this is probably the most important thing, remember that the fundamental principles of how we tax income in this country have not been turned upside down.
And you know, that leaves us with the big question. The intention is clearly to simplify things. But will this massive reorganization actually lead to easier compliance in the long run? Or will it, at least in the short term, just create a whole new wave of confusion and a whole new body of professional interpretation? That is the multi-billion-dollar question, and honestly, only time will tell.